Hey everyone, welcome back to the Essentials channel. We're going to be taking a little break from all the project reviews just to understand a little bit more on the market direction, and should you still be sitting on the fence or falling off the fence or continue building your fence. So these are a few crucial things you need to take note about the market so that you know how to navigate in 2026. It's kind of like the top 5 main concerns, but this time round it's about connecting the dots and showing you how the newspaper articles as well as all the recent news are materializing and coming to fruition exactly what we predicted in previous videos, such as top 5 main concerns of this year and the various land prices and the final window of the GFA harmonization advantages. You'll see all of them coming into fruition, and it will help you make a better decision on whether should you continue sitting on your fence, waiting on your fence, or building a higher fence, or jump off the fence and take some action. Alright, so as always, grateful and appreciative to all my audiences out there for personally reaching out to me, and I've already gone through the empowerment session with you so that we can connect the dots to the market concepts as well as the products to benefit your current scenario. Happy to say that I've met even more audiences out there, and it is a very normal scenario where you personally reach out to me because I've got all the answers to your scenarios. But most importantly, it is the personal touch and the connecting of the dots of all of these market concepts. Do feel free to reach out to me at 94569398 for your consultation. Else, remember to like, share and subscribe to keep the algorithm going. So without further ado, here is the crucial factor of 2026 that will help you navigate this year's market. Should you continue sitting on the fence or fall off the fence? Let's go. So to start off, this is the article that we have down here on the 2nd of April, Thursday, 2026. Private home prices increased by 0.3% in Q1, easing from a 0.6% in Q4 based on the URA statistics. So this is our flash estimates for the first quarter of this year, and it is very happy to see that it is still experiencing sustainable price growth. It is all in line with the government's vision for private market, which is to keep prices sustainable, keeping prices aligned with our income. So based on the red line versus blue line, if you all recall from my previous video where we mentioned a lot of times, that is exactly the government's vision, to keep price efficient, to align prices with housing income so that people can always afford the need of owning a private condominium or a private property. The whole idea is not to flatline the entire prices. Land scarcity is real. It is always going to be on an upward trend, but most importantly, has the government fulfilled its role of keeping prices efficient according to income affordability. Of course, I know you must have seen the news recently that our median income has hit the highest of 12k as compared to previous years, and this is a very happy scenario, indicating that the government is exercising prudence, alignment, and of course efficiency within the housing prices for the private market. So it is very clear what the government vision is doing, and it is fulfilling efficiently as what we have seen. The reason why there is an easing from 0.6 to 0.3% is also because of the lack of new launches. So if you backtrack a little bit to the 2025 land sales, actually you will realize that the 2025 first half land sales is actually quite little, and whatever launches that you are seeing right now are basically the lands that were sold 1 year ago. So based on Q1, you will realize that there's not that many launches to go around. We have the likes of River Modern, Newport, Nara, Pinery, and that's basically about it. Not much to go around, and it's all scattered between OCR and RCR regions, and that's the main reason why we didn't see that much of a growth. But 0.3% is still a sustainable growth pricing with a slight increment in the various projects PSF due to higher land prices. On the contrary, we move on to the next article, which is dated 2nd of April 2026. Within the same day itself, the Business Times and the Straits Times reported HDB resale prices declined for the first time in nearly 7 years. Now, don't say I didn't warn you. Based on my previous videos before, we have already mentioned that HDB is out to flatline the prices, and the government has given you multiple instances of indicators and warnings that definitely the prices are going to soften this year. Their main goal is to moderate the prices. So based on the past few articles that gave indicator that the government is definitely here to moderate resale prices, we just deep dive quickly a little bit on what were the past statistics. So if you look at the past statistics of 2021 to 2025, the government and HDB board has released 2,300 BTO flats between 2021 to 2025, exceeding their target of 100,000 new flats. They mentioned that we will continue to put out a steady pipeline of flats to meet housing demand. So 102,300 BTO units between 2021 to 2025, more than 55,000 BTO flats from 2025 to 2027. A clear direction to cater to the needs of the growing population, and the keyword is moderate price. The demand is very clear. We can see from there that the population has been growing steadily from 2021 to 2025, at 5.453 mil to 6.11 mil, with a growth of 50,000 PRs and 160k citizens. Now, how to make sense of that? So if we were to break down the numbers, dividing by the average household number of 3.09, the total number of units needed is 67,961 units, as we can see from this slide. So that's probably your demand, but there is also a new article after the budget talks that there were very huge concerns about the fertility rate dropping to new lows of 0.87. Citizens' population could shrink by early 2040. Similarly, the number of new permanent residents is also expected to increase to about 40,000 a year over the next 5 years, DPM Gun said. In 2025, around 35,000 people became PRs. So it is a very clear direction set by the government to continue bringing in new PRs and localization of citizens for the next 5 years, with about averagely 30 to 40,000. And if we apply the same formula of 40,000 times 5, which is 200,000 new PRs in the next 5 years, divided by 3.09, we will need another 64,724 units. Now, this is the breakdown of the demand for you. How does this actually tabulate out? You will realize that the demand between 2021 to 2025 is 210k, 2025 to 2030 is another 200,000 new PRs that will of course eventually localize to citizens. Divided by 3.09, we will need 13,268 units per year since 2021, versus the supply, where we have a total of 102,300 coming out between 2021 to 2025. 2025 to 2027, we have more than 55,000 new BTOs. 2027 to 2030, another 55,000, assuming they repeat what they did between 2025 to 2027. It actually tabulates out to an average of 22,471 units per year between 2021 to 2027. Oh my goodness. If you realize our supply is double the number of the demand. So it is very clear what the government is trying to do down here. And you will see that based on the past news, over the last 3 months, they have released multiple articles to warn you about the HDB decline. On January 9, 2026, HDB set to ramp up BTO flat supply further to moderate resale prices. Keyword, moderate resale prices. Another article, HDB to launch 1,600 BTOs in Lakeview and Shunfu. First new supply in over 40 years in those regions. Right, multiple articles to emphasize on this need to moderate prices. And because of this, with the BTOs ramping up, you will see it is always a tussle between BTO versus resale. It is always a measure of opportunity cost. Lesser BTO launches equals to resale demand increase, because if I can't buy anything, I need a home now, I choose the resale law. But once we have more BTO launches, I've already been waiting for so long to set up my family or find my girlfriend or marry my girlfriend, so on and so forth. Either way lah, or can be marry boyfriend also lah. More BTO launches also equals to resale demand decrease. And exactly, you will see that the resale demand dropped by 2,817 units as seen from these slides here. So with that in mind, there is a second problem about HDB. What happens if more than 13,000 MOP at the same time in the secondary market? This is exactly what happens. From 2025, only 7,400 units MOPing, to 2026, 13,000 units MOPing, to 2027, 23,000 MOPing. And that's why you have this newspaper article here, dated December 28, 2025. Influx of MOP flats in 2026 could moderate resale prices. Clear government direction to soften prices, ensure affordability of the mass commodity. Isn't this a double whammy? Very high supply of BTOs, very high supply of MOP units, which results in a 0% growth in Q4. And finally, we see this article happening. It came true despite multiple times of videos that I've done. I've emphasized to my HDB owners, faster make a controlled adjustment to your prices, meet the needs of Singaporeans who are in the resale market right now that is willing to take over from you. Make the adjustment of prices first rather than a free fall of the market prices due to natural market forces. And truth to be told, HDB prices dropped by 0.1% as reported in this news article here. So it's materializing as we speak, everybody. But why am I telling you this? It's also because the difference in government vision. HDB, the government vision is very clear. It's meant to flatline the prices so that it remains affordable to a certain income group and the mass market. And of course, the needs of Singaporean. The choice is there. Even if you're earning a higher income, you can still choose to buy a HDB MOP flat. We want to keep it affordable for you. It's meant to press prices down with various cooling measures and the play of supply. But when it comes to private market that time, it is meant to create sustainable price growth due to land scarcity issue. The government understands that due to land scarcity issue, it is impossible to press down prices. But since you are able to build your capital and upgrade to the next asset class, then our job job as the government is very clear. It is to make sure prices are sustainable by aligning housing price with income to ensure affordability is kept in check, and thus the red line versus blue line graph that I've been talking about all this while. So the key thing to take note is this: during your building capital journey, it is to upgrade and follow the change in government vision, right? Because you want to upgrade from a government vision that is meant to press prices down and meant to keep things affordable and not meant to be speculative, to a market where it is a free market, not here to press your prices down, but with the government's support of keeping prices sustainable. They want it to grow. If the prices in Singapore don't grow, the balance sheets in Singapore don't grow, people find it difficult to build wealth here. But the idea is this: if you can do it and you can make it cross the line, build your asset, go into a free market where the government has already exercised its controlled prudency and safety net for the private market to ensure that their vision continues to materialize, which is the vision of sustainable price growth in the private market. So make that vision change. And that's why you see these two articles coming out in 2nd of April affirming that HDB prices have finally dropped. Since the last round of articles that have appeared, it was in December. Government gave you more than 5 months to react to this. So if you have been stubborn or sitting on the fence not taking action, it's okay. It is still not too late. There is still a chance, and there is a need for newly localized Singaporeans that they want and need a home and a roof over their head. They still will buy HDBs. Probably if you do a controlled price drop, they see that it meets their needs, they see that fine, I will just take certain compromise, maybe I pay a little bit more knowing that the HDB prices will drop, but I need a home now, I'll still buy it. Make that controlled adjustment, upgrade to your private, because what is the most important component when it comes to an upgrade? Cash! It erodes away your cash as your prices drop, because you will always have to clear your outstanding bank loan or HDB loan first, then followed by the CPF that you owe with its accrued interest, and then finally that constitutes to the cash amount that you're going to get back. Cash is the most important component when it upgrades, and when the HDB market prices goes to a free fall due to market forces, then it erodes away your cash, which is the most important component. So helping you to connect the dots between all these articles help you make sense of the market so that you can come to a calculated decision-making process. In line with this, remember, government's vision for private market is to keep prices sustainable, but then again, it is also a willing buyer, willing seller market. It is a free market, which comes to our next point, the land prices of Singapore. So to the upgraders out there, this window of opportunity is really closing soon. Alright, because first of all, there is pressure against your HDB prices, which affects your cash component. Next, it is the pulling away of private condo prices. So for those first-time buyers, alright, that you don't have a HDB to upgrade from or whatsoever, you are the ones that can make a decision quickly. There is very, very clear direction that the market is heading for its rebound or its long-awaited rebound. Why do I say this? It's also because during the implementation of GFA harmonization back in 2022, it caused land prices to drop by about 20%. Developers were not sure how to build the units, and they were not sure whether consumers are able to accept the type of units that are being introduced into the market based on this new policy. That caused a little bit of uncertainty, and that is why land prices dropped. But now you see the land prices rebounding, and it is a willing buyer, willing seller market. It is a free market, a market of consensus. As long as the government sees that developers can take on this without risk, as long as the government sees that the affordability of consumers is kept in check, the housing prices aligning with income, then it's a free flow of the market. How high the developers decide to bid for in terms of land prices, they will allow it to happen. In fact, they are worried that the developers do not bid high enough and causing unsustainable prices, because why? Once they bid unreasonably and the government allows it to go through, it will crash prices unnecessarily. So that's why there was a previous news before with the land right beside One Marina Gardens where it was bidded lower than the One Marina Gardens land itself, causing instability of prices within that region. Alright, so now coming back to this part, you will start to see now the land prices are slowly increasing, hitting new records of at least 20% to even 40% higher. I know I mentioned this in my previous video, but now it is the scenario coming into fruition. So here we have on the 23rd of January 2026, top bid for Dairy Farm condo site is 5.7% lower than that for nearby plot sold a year ago. Hey, you all may be thinking, hey, wow, it's lower, what? Isn't it good? We have to see the land attributes. The plot ratio of this land is only 1.4. The land plot that they are comparing to is actually Nara residences. So you will see that the land plot that was bidded exactly on the master plan itself is this plot of land down here at a 1.4 plot ratio versus a 2.1. 1.4 plot ratio means that the maximum they could go is only 5 levels. For 2.1, they can go up to 16 to 20 stories, no problem. So with that in mind, people all misunderstood this newspaper article thinking that the land prices have dropped, but in actual fact, it hasn't. Otherwise, the government will be there to stop if they realize that there is intrinsic intrinsically disadvantage attribute to the previous land sold in the area. You will see that, hey, despite it dropping by 5.7, what does this translate into? So let's use Nara land price of 1020 per square foot per plot ratio. The dairy farm GLS that just happened is 962.34, exactly like what the article mentioned, 5.7% lower. So Nara residences launched at 1932 per square foot with an average pricing of 2149 per square foot and the highest transacting at 2457. If we do a prorated of the land and try to predict the dairy farm GLS future launch price, we will take 1932 divided by 1020 times 962. We will probably see the starting price of dairy farm GLS at 1822 with an average pricing of 2026 and the highest pricing of 2317 per square foot. But do take note, their maximum can only go up to 5 levels. That also means that the developer needs to charge higher floor loading or higher starting prices to make up for the profit margin, because when you have a 16-story building, you can actually spread the profit margin out throughout the 16 floors rather than just limited to 5 stories. So if we add this 100 per square foot buffer to make sense of it for the drop in floor levels, that would translate to a 1922 per square foot, 2001 per square foot and 2400 per square foot, similar to the high-rise building. So did it technically become cheaper? It didn't. Now you are technically paying the same price for something that instead of 16 stories become 5 stories for a smaller scale condo. Did it become more expensive intrinsically? Yes, it did, because what could get you a high-rise before that now could only get you a low-rise condominium. Then again, this reflects the pattern and the trend of rising land prices. But let's go for something that accentuates this even more. 6th of February 2026, we have CDL Wohak tie-up tops Tanjong Rhu site tender with 709.25 million bid at a 1455 per square foot per plot ratio. Now, we all understand that Tanjong Rhu is a new township happening as we speak, alright, because East Coast itself, if you look at the master plan as what we are seeing here is the Tanjong Rhu master plan. If we look at the whole entire Marine Parade area based on the master plan, as we can see, with our population growth happening as we speak, definitely there will always be this segment of the population that wants to stay in the east. It is a need. My family is there, my workplace is there, my preference is also there, or my job opportunities are there as well. Or basically it's just life preferences. Everybody has a choice. They can stay in the north, south, east, west. There will be new population coming to Marine Parade area. If we look at the entire master plan, the key question to ask is, where can we put a new hub to cater to new population? The current hub that is serving this whole area is probably your familiar Parkway Parade. It's already overcrowded and overloaded and overstrained, if you ask me. With new population coming in, it's going to cause even more strain and more pressure on the crowd and the footfall in that area. In order to cater to more population, there's only 2 places to go to extend left and right, and that's why you have the new Bayshore Township, which has been planned since 1980s, and the MRT is finally operational, and another one which is Tanjong Rhu area. With that in mind, Tanjong Rhu, if you read the news, actually there is going to be about 12,000 to 13,000 of BTOs coming up, with the first batch slated to TOP in 2028. If you times 3.09, that also means a population of additional 30 to 40,000 coming into the area. Currently, there is no hub in that area. They are trying to develop the Kallang area or the Kallang Basin, but it's also going to take time. The current mall serving down there is Kallang Leisure Mall and Kallang Wave. I think you all have been there before. It's not exactly that extensive a mall as compared to what Parkway can do. So of course, it can offload the pressure a little bit, but otherwise, all of these 40,000 population will probably still head over to Parkway Parade. But with new population already in place, and that is why the government is here to focus on this next township, which is the Tanjong Rhu township, and the first land has already been sold at 1455 per square foot per plot ratio. The opportunity is here. You look to the right, it's Marine Parade. There's not much there. There is actually a new hub. There's a reason why the One Marina Gardens township is actually being created. It is an extension of the Tanjong Rhu. Because why? Every time when there is a new township being created, there must be new population. Otherwise, why bother create a new township and a hub? There will be commercial, there will be shops, there will be malls here. If you liken this to the previous transformation of Serangoon and Kovan, you will realize it runs a similar blueprint as well. That's why Kovan, residents in Kovan, are always able to travel that one stop to Serangoon to go to the largest mall in the entire northeast region, which is the next mall. Are we going to see the same thing happening here? So a lot of people who look at the One Marina Gardens area and then they say that what the hell is the government putting another township down here? Maybe you are missing the point. This is also an extension of the Tanjong Rhu vicinity. So with that in mind, then that's why you have this land down here that's sold at 1455 per square foot per plot ratio. Now I tell you so many stories, not for fun one, because I'm going to do the comparison using the One Marina Gardens launch price and land price, because this one draws very strong similarities with each other. So 1402 per square foot for OMG, their launch price is 2770 with an average price of 2956 and the highest price of 3310. With that in mind, it translates to a prorated calculation of the Tanjong Rhu likely launching at 2874 with an average pricing of 3067 and the highest pricing of 3435, probably for those with better views, such as maybe a little bit of the sea views or the greenery views, depending on what they face. With that in mind, we are already seeing the Bayshore Villa Bay launching at about 2.6 per square foot for those facing the roads, or probably the ones facing behind with the block views or future HDB views. We're gonna see probably 2,800 per square foot for those facing ECP towards the sea direction, but unable to clear the canopy in front. If we hit up, in order to cross the canopy, we have to be above 9-story, and that itself will already bring PSF up to 3,001 to even 3,002, with probably the highest floor being at 3,005 to 3,600 per square foot. If Bayshore is at that price and Tanjong Rhu is at that price, I think maybe we might see value in this land itself. And therefore, it translated to our previously predicted pattern, which is the land prices are going up. Now, the final window is here. Capitalize on those lands that have been sold under the influence of the introduction of GFA harmonization, where the land prices dropped by 20%. Now you will realize all the land prices have already increased by 20%. Minimally. Next, we move on to the next article, which is the Lentor area. Google Land Group tops Lentor Central site. Tender with 1,278 per square foot per plot ratio, bit above expectation. Google Land must have a lot of confidence in this area, but you also can see as a power act by the developer themselves in terms of their confidence in this area. It kind of lost their foothold there. Otherwise, it would have been dominated by Google Land altogether, except for the likes of Hillock. I think this is a statement that they want to make, but it is also a new age decision that I believe a new age businessman will do. They create their own demand, they set their own price point down there so that they can give a lot more confidence to previous consumers of the Lentor area that bought from Google Land themselves, such as Lentor Modern as well as Lentor Mansions, so on and so forth. But it is also the resale prices in that area that gave the confidence to Google Land to bid for this last plot of land in the Lentor Central area. Why? Because if you realize the last transaction of Lentor Modern actually transacted at an average of 2,400 to 2,500 per square foot as a resale. Alright, so meaning to say, Google Land has probably seen that the consumers are able to accept this per square foot in this OCR region, and that's why they bid aggressively for this plot of land as well. They have seen the acceptance of this pricing within the consumers in this area. So the last land that they bidded was actually the Lentor Central Residences, which launched last year. The land bidded was 982 per square foot per plot ratio, launched at 1,914 per square foot with an average pricing of 2,222 and the highest price of 2,586. If we do a prorated calculation with their recently bidded pricing, it would translate to a launch price of about 2,490 per square foot, 2,891 per square foot on average, and the highest pricing of 3,365 per square foot, maybe for the unblocked landed view facings, because they share the same views as Lentor Modern, which is exactly the land right beside this land that they currently bidded. If the resale prices are already able to pay 2,400 to 2,500 per square foot non-harmonized, if we translate that to harmonized, it would mean that probably the consumers, the resale buyers of Lentor Modern, bought it at a 2,600 to 2,800 per square foot. Wow, and that actually gives them the confidence why they dare to bid this land at 1,278 per square foot per plot ratio, with their launch price as stated as what we have seen. Of course, all this remains to be seen as more info is being released by the developers as we draw closer to their launch date. But now we probably understand the rationale behind the developer's decision. Next, we move on to this article on the 27th of March, Friday, 2026. Foresee Qingjian in group topping Dover site. Tender with 951 million bid at 1,556 per square foot per plot ratio. Now, this is also, like what I mentioned in the previous article, a power play by the developers. Why? Because there is Hudson Place coming up. Where else is a better decision to do than to place so much confidence in the next land, to give confidence to the current consumers to buy into their Hudson Place? I foresee that this is exactly the direction and decision of this new generation management from Qingjian themselves. They are also doing a similar direction like what Google Land did. This time round, it is in the Greater One North area where they started off with Bloomsbury, followed by Hudson Place, and now this final bidding in the Dover land site itself. In the past, traditional developers or traditional decision-making developers will probably be more prudent and be more mindful because they have a current land bank on hand. They will want to sell this current stock off before going for the next land. Here, you can see it's a new generation business decision-making process where they create the demand themselves and they set the price themselves. I think this is a very smart move and is in line with current business decision-making trend. And I agree with it, because if I'm the developers, I would actually create my own demand and create my own pricing. That's why they went in with a power bid of 1,556 per square foot per plot ratio, giving a lot more confidence to their launch of Hudson Place, which is coming soon in 1 month's time. Imagine if you are the consumers now and you see Dover site coming out at 1,556 per square foot per plot ratio. You will translate this to Hudson's Place of about 1,000-ish per square foot per plot ratio land price being bidded. And with that in mind, does it give the consumers a lot more confidence to go in, knowing that there is already a next land benchmark price being set at 1,556 per square foot? So if we use Bloomsbury launch price to prorate accordingly. Bloomsbury land price was actually sold at 1191 per square foot with a launch price of 2348, 2516 and 2716 being the highest. If we do the prorated calculation, this Dover site will eventually likely be launching at 3067 per square foot, 3287 per square foot on average, with the highest being at 3548 per square foot. Of course, all these numbers are just my current prorated calculations. So far, it has been quite accurate, but otherwise, developers can make a little bit of cuts here and there to reduce the launch prices, or play a little bit of gimmicks here and there to reduce the launch prices, but load it somewhere else to do dollar averaging so that they can still get their profits. But otherwise, you will see these are the prorated numbers. It is in a way power play act by the developer where they actually create their own demand, set their own benchmark prices just to drive the consumers to go for Hudson Place. It's a smart move, I must say. But then again, it aligns with our current vision that the GFA window is closing right now. All the land prices are already 20 to 30% higher. In fact, this Dover site is close to 30 to 40% higher than what was transacted at Hudson Place. So now we move on to the final land that has been sold in the most recent times. So on April 7, there was another land that has been sold to Fraser's Property Mitsubishi Estate. Tops bid for Kallang Close GLS at 1415 per square foot per plot ratio. Similarly, this is quite the same and quite consistent with whatever that has happened at Tanjong Rhu area. Anyway, Kallang and Tanjong Rhu, they are basically connected in terms of infrastructure. Don't forget, there is this Kampong Bugis precinct where the government is going to next focus on the transformation happening there, with probably a focus on AI in that area. So using the same example that we use for Tanjong Rhu, because these are all classifications of new townships, then OMG, One Marina Gardens, the land bid price was actually sold at 1402 per square foot per plot ratio. Comparatively to this Kallang Close GLS at 1415, OMG was launched at 2770 per square foot with an average pricing of 2956 and the highest pricing of 3310 per square foot. With that in mind, we do a prorated and we will see that likely this Kallang Close GLS will be launching at 2795 per square foot, 2983 per square foot on average, followed by 3340 per square foot with its highest prices. Of course, if they get a little bit of the water views and all, then maybe they price it a little bit higher at 34 to 35, since the sea view facings at Bayshore and probably Tanjong Rhu area are going to be setting new benchmark prices at 3005 to 3600 per square foot for the sea view facings. With that in mind, it further affirms whatever that we have mentioned so far in terms of the final window of the GFA harmonization. That time it was more of a speculative thing that you all maybe think it's going to be a sales gimmick, but in actual fact right now it is materializing as we speak. There's many audiences out there who reached out to me and I floated this concept to them previously and they have since taken action, and then now I'm sending supporting articles like this to them and they cite that they are very happy that their developments that they bought are indeed at an advantageous position, but most importantly it's already being supported by future land prices, and these developers have no other way to cut anymore. The only way is they can just like spread the load differently through different bedroom types, but otherwise in general their launch prices has to be higher based on very detailed calculations or break-even costs. And with this current conflict happening in the world right now, the supply chains are definitely getting more expensive. You will see that the material cost and construction cost is on the rise. So it is working in your favor for those who actually jumped off the fence and took action in that sense. For those who have been sitting on the fence, some of you have already fell off the fence because you have already been priced out. Some of you built a higher fence, indicating more barrier there, telling me or telling your agents, in fact, that hey, let's sit and wait and continue seeing. Don't wait and see anymore. There is this opportunity that even the logical mind can decipher it. It's not a sales gimmick. So if we look at this is further emphasized in this example. I think you are no stranger to this concept, so I'm just putting here for a quick revision. So we can see from here we have Lentor Modern, a non-harmonized development at 990 square feet. If harmonized, it is 930 square feet. We do a little quick prorator for you. Agak-agak lah ha. It was sold as a resale at 2.408 mil. An OCR resale sold can actually buy new launch in the RCR region such as Penrith for the same unit type, same size at the same price. Now usually once we sell a mass market development and we want to move to a city fringe development closer to downtown, either we have to top up, drop the unit classification or drop the size. Now you don't have to do any of that, but not only that, you can get a brand new development at the same price. If you are a resale buyer or if you are a buyer today, would you go for a new launch or would you go for a resale? This is such a clear opportunity that nobody can ignore. Alright, next we have another one that we see here, which is Park Colonial. A resale, Park Colonial non-harmonized at 936 square feet. If harmonized, it will be a pro-rated of about 890 square feet. It was sold at 2.325 mil as a resale. After selling, they can actually go and buy a Sky at Holland, a CCR development harmonized at 915 square feet at 2.394 mil. Now, if you are a buyer today considering the resale or the new launch, which one will you go for? A resale that's further away, costing the same price as a new launch that is closer to downtown? Right? I think the opportunities are very clear. It all has to do with the drop in land prices that have actually happened previously, because in 2022, when the GFA harmonization was first implemented, they were uncertain whether the consumers are able to accept the type of units being built. As times went by and the launches happened, it was very clear to the developers. These new variants of unit types are very well accepted by the consumers. But backing track, the land prices dropped by 20%, and now with this newfound confidence within the developers, they start to bid very aggressively for the land bids, and that's why you see the land bid prices happening as we speak, as stated in this video. All the articles here already show a 20 to 40% increment in terms of land prices. So can we catch those lands that were sold when the prices were coming down? Can we still capitalize on that first movers advantage? So that's why you see the likes of Alta, you see the likes of Ori, Nava Grove, One Marina Gardens, Zion Grand, Springleaf, The Sand, as well as Tengah Garden Residences. All these belong to the period of time where the land prices were dropping and declining to by 20%. And that's why you see my audience, some of them have went for One Marina Garden, some of them has went for Alta, some of them have went for Tengah Garden, some of them have went for The Sand. These are developments that fall under my recommendation because they happen to be in the period where land prices were low. Now, after Jan 2025, you will see the land prices slowly inching up, which is exactly the current batch of new launches that you see in the current market. Like what I always mentioned before, Villa Bay at Bayshore will mark the end of this GFA advantage window, because the next launches that you see starting from June 2025 onwards, they are all 20 to 30% higher, which was covered in my previous video. So if you're still sitting on the fence or building a higher fence, alright, do not create that trap for yourself. It's time to jump off the fence and take the action that you need. This is again further supported by this new article down here that is written by our favorite journalist called Leslie Yee. He is always a bit more controversial here and there, but he dares to voice his opinion, which I agree with him sometimes, or yet we don't agree with. But it's okay, it's his own personal opinion. But this time around, what he said is really true. High per square foot prices of new condos could be increasing irrelevant to buyers. Exactly like the previous example that I showed you before. Just comparing Admiral at Katong versus Tembusu Grand. Based on the usual trend, this Tembusu Grand was sold in April 2023. Admiral at Katong was launched in November 2024. By right, 1.5 years of difference, a launch that launched later should cost higher than a launch that launched earlier. But look at the 1 bedroom, 2 bedroom, 3 bedroom and 4 bedroom prices. In fact, Emerald Katong was launched at the same quantum at what Tembusu Grand launched at. In fact, maybe some of them were lesser. But don't forget, time has transpired. Affordability has increased, but the prices went back to 2023 prices. And that's why 2025's launches were all crazy, because it was yesterday's pricing, today's affordability. So back to Leslie's article, high per square foot prices of new condos could be increasing irrelevant to buyers. Back then, those who were sitting on the fence were looking at the PSF, focusing and being very nitty-gritty about the PSF. But don't forget, we are building a lot more functional homes, a lot more efficient home, and as stated in his article, crucially, new condo buyers perhaps willingly pay a high price PSF because when they want to sell their unit, many potential buyers prioritize having a modern fit-for-purpose home. Unsurprisingly, developers meticulously craft well-designed and functional homes, as many new condo buyers today are owner-occupiers. Separately, there is another paragraph which he highlighted. Developers have become adept at providing highly efficient new condo units. Boxy homes instead of curvy or odd-shaped ones. While new condo projects may have less distinctive and differentiated designs, buyers get homes that prioritize functionality and, if I may add, consistency. With consistency, resale buyers who come and take over units do not have to guess. Lesser guesswork equals to higher price sustainability, higher exit strategy. An old condo home may have an odd-shaped room or a column that cuts awkwardly across the living room or a long and narrow corridor. Can an interior designer work around such problems? In contrast, a new condo home may offer balcony space that seamlessly integrates the living area or the flexibility to add or remove a wall, thereby creating or removing an extra room as needs change. New condos maximize natural light, making spaces appear larger and more inviting. Now, what I like here is what, quote unquote, a couple with 1 or 2 kids may find a new 850 square feet condo home with 3 bedrooms more suitable than an older 1,100 square feet condo unit with 2 bedrooms. Critically, it may not be possible to add a bathroom to a flat with insufficient bathrooms or a private lift to an old large 4-bedroom condo unit. So here he is discussing the trade-off between the newly designed, more functional units that have gone through the improvements of URA policies as compared to older, oversized units for their own bedroom types, such as the 2-bedroom being at 1,100 square feet, or even if you can get a 4 bedrooms but it's possibly a walk-up apartment or a very old design, outdated lift service. So with all these factors in place, we can see where the new consumer behavior is heading to, which always floats along with my idea of buy new launch, so that you can cater to future consumer needs, exactly as supported by this article down here. Alright, you buy new launch is to cater to future consumer needs by keeping up with URA housing improvements. Alright, so with that in mind, to connect all the dots for you, exactly it is happening as we speak, and whatever that I predicted has already materialized. So to all those audiences who have reached out to me and followed my advice and consultation, really very happy to go through this journey with you because it is materializing as we speak. If you are still sitting on the fence, do feel free to reach out anytime and I can cater to your scenario and merge all these concepts together so that we can make this move together. My job is also to get you off the fence, right? To reduce the fence from building higher and higher, because I think the opportunities are becoming more and more narrow as we speak. With the higher land prices happening based on the past few articles, the URA prices inching up by 0.3%, as well as the HDB prices dropping, it is about changing the government vision from flatlining to a free market. That's the first things for all my HDB upgraders out there. For the first time buyers, because while capitalizing on the GFA harmonization advantage, by right, if this policy didn't even happen at all, prices would have already followed the trend of higher and higher land prices from 3 years ago. You would have already been priced out since 3 years ago. But right now, while you're still being priced in at the moment, make that decision that you need to make. Start the building capital process. You may not be able to get the most ideal location or ideal home, but it's all about kickstarting the process so that you can gain extra capital for your next bigger quantum. So as what we have mentioned before in the 4Ps concept, the accumulation of your capital will always be faster than the down payment despite the prices increasing. Always remember that. So for my HDB upgraders, cash is the most important component. Take action now. For those who are first time buyers, by right, based on usual land price trend, without the implementation of GFA harmonization, you would have already been priced out because the land prices will have been much higher over the last 3 years. This GFA harmonization has helped you create that opportunity and caused land prices to drop over the last 3 years. Now the land prices are regularizing and normalizing to its usual trend of higher and higher. Can we faster get in for you before you miss this boat once again? By right, 你是没有这个机会的， but 现在 because of GFA harmonization, you have. So next thing is this. Does it mean that the higher land prices, because you see some of the land prices inching up already, also means that you have missed out? Maybe not. There's a few more supporting data that Propnex and myself has actually analyzed. So you can see from here, OCR land prices, this chart down here, that shows the OCR land prices over the years between 2016 to July 2025. This includes Villa Bay, where it reflects a higher land price, as what we have mentioned, it has inched up. This also reflects like Chuan Grove inched up to about 1,376 per square foot. But does it actually mean that you already missed the boat totally? So we have previous experiences like Twin View and Whistler Grand, right, where the land prices of Whistler Grand actually went up to 800 per square foot as compared to Twin View at 592 per square foot per plot ratio. And if we look at that, we actually see Whistler Grand, alright, because Whistler Grand here was sold at 800 per square foot per plot ratio at about 210 per square foot, higher than its opposite counterpart, which is Twin View. You will see from here the purchase price of 1,280 per square foot and 1,476 per square foot, ultimately selling at 2,008 and 2,124 per square foot, making a profit of 720k and 621k respectively. Despite paying higher cost for the land, owners still make profit despite paying slightly higher for the development itself. Alright, so we have another 2 more examples, which is Amor Residences and Lentor Modern. You will see that previously, before Amor Residences, lands were sold at 930 per square foot per plot ratio, 644 and 650. Subsequently, Amor Residences in Ang Mo Kio Avenue 1 was sold at 1118 per square foot, setting new benchmark of additional 200 per square foot. Lentor Modern was actually sold at 1204 per square foot per plot ratio, higher than what Amor Residences was sold at. This again mimics a similar pattern that we are looking at right now, where the land prices are already inching up. And if we look at the examples of Lentor Modern, the higher land price also translated to a higher purchase purchase price by the consumers. They bought Lentor model at 1895 per square foot and 1995 per square foot, some even 2001 per square foot. Ultimately, some of them make an average profit of 350 to 400k. The ones that we have stated that bought at 1895 to 1995 ultimately make 324k and 504k respectively. Amo Residences was considered the higher land price one as well. They were sold at 1943 per square foot and 2120 per square foot when they hit the market that time. It was really a new benchmark that made the papers. Ultimately, today they resold for 2430 per square foot and 2576 per square foot, making 467k and 476k respectively. Now, can you see that despite higher land costs, the owners who bought it still ultimately benefited from it? Finally, we have the RCR side. In case you think that we are cherry picking, definitely this is not. RCR, we have Sterling Residences. Previously, we had lower land prices at 939 per square foot and 1001 per square foot per plot ratio. Ultimately, Sterling Residences was sold at 1051 per square foot per plot ratio, about 100 per square foot higher than the previous land sold. And you would see that for Sterling Residences itself, they made 848k, 180k, 989k, some even close to $1 million. We have another example, which is One North Eden, which is Slim Barracks at Parcel A. Previously, within the same regions, they were selling at 1,900 plus to 1,000 per square foot per plot ratio. Ultimately, Slim Barracks Parcel A, which is One North Eden, sold at 1,246 per square foot per plot ratio, about 200 PSF higher. You would see that during this period of time, the land prices have already increased and inched up, exactly the same phenomenon and pattern as what we are seeing right now, an increase of about 20% in terms of land prices. But ultimately, those who purchased One North Eden still made a profit of averaging 600 to 670k. So the key thing to take note is this: yes, it is true that despite higher land prices, the consumers who bought still profit. But while there's a chance to enter when the land prices are low, and you still have options and developments that are still falling within the low land price era and region, why you don't want to capitalize on this and still sit on the fence thinking too much and being too nitty-gritty about the numbers and the attributes? So with that in mind, there is still a crucial window of opportunity happening as we speak. Definitely, I want to be able to help you to choose the right products and recommendations, to connect the dots for you, to ensure that you have a clear exit strategy ahead. So if you want to know what are my recommendations, do remember to set up a one-to-one consultation with me at 94569398. I'll definitely recommend with a heart something that caters to your current scenario and connect the dots, and most importantly, come up with strong acumen and solutions. Maybe you might want to own a landed in future. Like one of the case studies that I've had, they say that their ultimate goal is to buy a landed for their retirement. But based on their current portfolio, they can sell everything, but the best they could do is only a 99 leasehold landed. I said, why not we use this as a stepping stone, capitalize on whatever that we mentioned in this video, make this one round first so that it gives them a capital to upgrade to a freehold landed after selling everything within the next 4 years. And true enough, I worked out the numbers for them and they are able to see this vision and this outcome materializing, and that's why they went ahead with a project of my recommendation today. So do remember to consult me on this. Not all projects can buy. I will definitely be here with another set of frameworks and structures to help you to determine which project is good for your current scenario so that we can achieve a bigger picture and a bigger vision together. Remember to like, share and subscribe to keep the YouTube algorithm going. It keeps me motivated, creating more unique insights for you like what I've been doing so far. I strive to add a lot more depth to my content. So remember to like, share and subscribe, and I'll see you in the next one in the Essentials channel.